They were
What's
way
the
up
biggest
here.
paper trade that you missed?
Oh, gosh, GameStop. For sure, I would say.
Yeah.
I mean, when you look at it, it was what, up 2,000%?
What else? What tech stocks you like right now?
I still like a lot of the stocks that support the AI infrastructure. In other
I
words,
can't even get Siri to understand me.
well, so there's an example. Apple is getting
I
heavier
literally asked
into
it,
AI.
call my wife, and it called another woman.
Oh,
That's probably not good.
you won't be on the wrong side of a roaring kitty when it reverses.
Yeah, well, look, I don't even know what a roaring kitty is. I thought that was a porn star or something, like you know.
From the 70s?
Yeah. Hey guys, I am so excited. I am so excited to be here and to announce our new partnership. I am now part owner with these two dudes. Okay.
You're one of our brothers.
Yes, sir. Well, we've always been brothers, but I'm so excited because for, I don't know, 2 or 3 years I've been talking to you guys now about kind of teasing out my offering to our audience, our big audience that is heavily invested in the stock market, by the way. I know a lot of you guys know how much I believe in real estate and sales and owning your own business. And you've heard me maybe be negative about investing in stocks only because I didn't know how to play the game. Many of you have come to me and said, look, you need to provide us with education so that you can become confident, independent, and financially free. The stock market is how big is that business? All stocks, just in the U.S.
Trillions and trillions of dollars. It's not quite as big as the U.S. debt.
Right.
But close. It's getting close to that.
Yeah. And I mean, if you want to truly get wealthy in this country, and I posted this on Twitter last week, it's like, how could you know about the next Jeff Bezos deal, Amazon, the next Facebook deal, the Microsoft 40 years ago, Starbucks, whatever, 40 years ago. If all of us could know, and these guys are the smartest, brightest minds on Wall Street today about getting you, they're basically tracking data.
Yeah.
They're following data like I do on real estate. Who's selling? What did they pay? Can I buy it? That deal I just did yesterday.
Yeah.
You know, when did they buy it? Are they in trouble? I'm looking for distressed sellers. So you guys are in for a great ride. We want to, is part of my mission to equip the community, our community here, with tools and resources so that you can be confident and become independent and financially free. We're constantly evaluating areas where our clients are demonstrating interest, and you guys have. We were at a conference. You guys were there with
GrowthCon.
With
it was killer.
Arnold and Tyson, and you guys were there. And you guys told us over and over, dude, do something together with the Najarians. Okay, you guys have seen these guys with CNBC and Fox Business, and for years. How long y'all been playing this game?
TV for about 30 years, Grant.
Yeah.
30 years. Because we were independent, we were able to go on TV and talk about what we were buying and what we were selling. But if you work for a big investment bank, they'll only let 1 or 2 people from that bank, whether it's Goldman Sachs, Bank America, Merrill, or whatever, they'll only let 1 or 2 people talk. So the competition was between us and Goldman and JP Morgan and that. So,
and when those guys go on TV, they got them on a short leash too, right?
Absolutely.
As to what they can say or not say.
Right.
Well,
Yeah, we were wide open. We were able to say what we wanted to say, and it sort of surprised people a lot of the time. Matter of fact, we started, the most heavy start for us probably was 2007. And that was at CNBC, that was Fast Money, and we talked about a lot of things that nobody had ever talked about on TV before. And what's going on in the options world, the derivatives world, and giving people a little bit of an understanding of, hey, you want to use leverage in this world? This is the place to be. And so, and we immediately started talking about the unusual option activity that's going on that we see on a daily basis and what Jon and I monitor throughout the day, every day.
Yeah. I mean, so Grant, when you look today, for instance, you hear about Roaring Kitty, which is this guy that's saying, go out there and buy GameStop, go out there and buy AMC and things like that.
Ouch.
And, in some cases they do pretty well, but they don't really understand other than that they think it's a rigged game, a big hedge fund is short this stock, let's all gang up on this guy or this gal and shove it where the sun doesn't shine and make a bunch of money. But you didn't learn anything other than just attack one stock. And if we all act like one giant shark instead of a bunch of little fish, we're going to do okay. We're more about educating people and saying, this is what you have to pay attention to, and you don't have to risk your whole nest egg.
Yeah.
You know, you should have a portion of it in there, and as long as you understand how to invest properly, you can do it with less risk, and you won't be on the wrong side of a roaring kitty when it reverses.
Yeah, well, look, I don't even know what a roaring kitty is. I thought that was a porn star or something, like you know.
From the 70s?
I mean, I'm like, I don't know, but I do know about GameStop, okay? I know about AMC this week going up 100%. People are asking me, hey, man, did you invest in GameStop? I'm like, no, dude, I didn't. Because, and this is what I want you guys to know. Like, you can do that one time and get lucky one time, but what are you going to do the second time?
Yep.
Like if you don't have an education, you don't know what you're doing, and you just got lucky. It's like winning a lottery, okay? You're going to be happy for a second, but you're going to realize a moment later, I can't win another lottery. So we're going to create something here, market rebellion. We're literally going to create a rebellion across, and I'm just going to name them out because I don't think you guys will.
Please.
The Schwabs, the Fidelities, the State Streets. I'm coming after your asses, okay? You guys offer terrible service, okay? People are bailing.
Yep. Schwab, they're leaving en masse.
Yeah, customers are leaving Schwab.
Yeah,
because
because they're a great firm, but they've bought so many different pieces, Grant, and when you shove them all together to try to make one big company, they don't talk to each other.
yeah, so they bought.
TD
Well, they had Schwab,
Ameritrade.
that's $7 trillion.
Yep.
Ameritrade.
Yep. They bought Scottrade for
Scottrade.
billions of dollars. They bought Thinkorswim. I mean, all of these
If
different
you guys
companies.
know any of these names, maybe you're invested in these Thinkorswim. You're a customer there, right? Because I'm going to tell you something we're going to do for you here.
They've had some outages as well. I mean, trying to get these things all to work together really that fast, it is an unbelievable challenge. And we've been seeing this go on for a long time because they keep on doing it. Now, they're a great firm, as John said, but trying to get all of this information all into that same box, it's not working right now. And they have outages constantly.
And so customers are having a problem.
Yes.
Looking at their account, seeing where their trades are, right?
Yeah,
Can you imagine coming into it? Sorry, John, but can you imagine coming in and all of a sudden everything you've got is down and you're trying to figure out where you need to be and you're hearing about this Hello Kitty or whatever his name is. Roaring Kitty.
Right.
Hello Kitty. And you wonder what your position is and hey, I'd like to sell. Well, you can't sell because right now we're down. I mean, that becomes a major problem.
Oh, my God.
Yeah.
So
imagine that.
What we want to do, what I've done at Cardone Capital is really provide a lot of care and support for our investors. We've raised $1.3 billion there. We're going to do the same thing with this partnership. We're going to provide you with the kind of care and service that Schwab and Fidelity, because they've become enormous, $7 trillion Schwab. Okay, these are enormous companies that at some point lose the ability to actually take care of the customer.
Yeah, I mean, customer service still matters.
Yeah.
It matters every time somebody calls here, calls Cardone Capital, and your guys pick up the phone on that second ring, if they haven't already intuited that it's coming before that. And it's customer service and giving people tools to help them, rather than just saying, hey, this is the best we got, go ahead.
Not only help them, but educate.
That's what I was going to say.
That is the most important thing I think that John and I have always said since the day we went to CNBC more on a full-time basis, but try to educate people in something that's complicated, but you can actually bring it down to any level.
Yeah.
And just explain to people, how do you use options? How do the derivatives really work? When do I know what my risk is? Risk is the biggest thing. You buy a stock, you have some pretty strong risk on, right? I mean, you do options, now all of a sudden you've found leverage, and you can figure it all out.
Yeah.
But you just have to understand that. Being long, being short, all those things. There's that's a bit of a challenge, but you've got to educate people. And if they get the education,
and
they get
Schwab, I had a Schwab account, I've had a Fidelity account. They've never offered me an education. Right? They offer me a phone number to call. They'll hold my money, not pay me anything, but they've never said, hey, let me show you how to use it so you have confidence. Okay?
Right.
So let's just talk about, like Warren Buffett, okay? I hear Warren Buffett say, and I'm a big fan of Warren and what he's done, but I hear him say that if he was an investor, he would buy ETFs and mutual funds. Mm-hmm. But then when I look at what he's actually doing, he's actually buying options.
He is. Yeah.
So one of the things I've asked you guys in the past is like, why is he buying options, but not telling people to do something else? and then why is all the smart money buying options?
Right. Well, Warren Buffett famously said, along with Charlie Munger, his partner that just passed away, hey, options are a weapon of mass destruction. And if you don't know how to use them, he's absolutely right. If you know how to use them, like Mark Cuban does, like Warren Buffett does, like Bill Gates does, like Michael Dell does, all these biggest investors.
These are multi-billion-dollar,
biggest billionaires in the world.
$100 billion guys.
Yeah, absolutely.
Why do they use options? A, they can define their risk. So now you're managing your money instead of just kind of betting on Roaring Kitty. And I'm not putting Roaring Kitty down as much as I'm just saying, for him, it works. For the people that get in early with him, it works. But if they don't have discipline, Grant, and if they don't have an education on how they should manage that money that they make, they should probably take some of that and diversify over into real estate. The more money you make over here in the stock market, why not be over there back in real estate and so forth? I mean, that's what you guys have been all about, and you've done a fantastic job. That's why we wanted to come over with you guys. Because we said, otherwise you're only seeing half the game. If you're only in real estate or if you're only in stocks, you're seeing half the game. We can show you the whole game, and then you can be like those names we just mentioned.
But where do I start, or with the viewer? Where do they start with even understanding, like, what's a derivative, what's an option, what's a put, what's a hold, what's long term, what's risk?
Sure.
Like, I don't know what risk really means.
Yeah, and all this comes down to the educational side of it, right? I mean, you have to start at the very beginning. Everybody coming in is going to say, well, what does that really mean? I'm long a call. What does that mean? Well, we define that.
You're long a what?
Long a call.
Okay.
And that is the equivalent, it's a share equivalent of 100 shares. Now, that all being said, you have to know different strike prices, different months of expiration cycles. Those are things that are a little bit complicated, but we can make those less complicated by educating people. And they can get themselves into this and understand it, like Warren Buffett. Well, Warren was so smart because a lot of the time when he gets into positions, new positions, he starts with options. And why does he do that? Well, because if it's stock, he's probably going to have to let everybody know what he's doing. He's got to file. He's got to do this. But you do the options, it's a little bit of a different thing. That's why he likes to position in.
He doesn't have to tell people what he's doing on options.
Not with the options.
Not until he gets to a certain level of ownership, like 10%.
Which would be...
That's a big piece. I mean, so for instance, yesterday evening, Grant, Warren Buffett announced through Berkshire Hathaway that he'd accumulated $6.7 billion worth of Chubb, a big insurance company. Well, today the stock jumps $25. I mean, it's a fabulous, and
he did that through options, or he did it
some of it through options, a lot of it through stock. We don't know how much yet because he doesn't have to disclose it until he gets to 10%. And it's not just Warren Buffett, it's anybody. If you get 10% of a publicly traded company, you've got to declare. And then when you start selling it, you've got to declare as well. So
but up until a point.
9.99.
He doesn't have to tell anybody, and then it triggers.
And so then
it's too late.
Exactly. But a lot of people will want to coattail on what Warren Buffett's doing. And think about this. As many great trades as he's made, the Oracle of Omaha, love him. Just a week ago, he did his big thing, thing in Omaha where he brings in 25,000 people. Come see him talk about trading and investing and how he's managed their money if they own a share, just one share of Berkshire Hathaway. They can come to this meeting. Well, what he's done is he's also been very disciplined about taking losses. Took a big loss in Exxon. Took a big loss in IBM. Why does he talk about that? Because that's part of the game. You've got to cut your losses. That's why we love options, because you can cut your loss a lot quicker with options than you can with stock. Stocks go down, and he might have lost billions of dollars on some of his recent losses that he incurred for, again, IBM. Or
there was something else he bought, and he said, "Man, this was I take complete responsibility for it. I'm the one that decided to buy this." But I forget what it was.
I was trying to remember what it was.
It wasn't IBM, and it wasn't Exxon, but
no.
So you guys are looking for. Let me just go back to the education piece. How long is it going to take me to learn? If I'm committed to I'm going to learn how to make $100,000 a year in options as an extra hustle. How long is it going to take me to learn?
Well, I would say it depends a little bit on how much you're starting with. So in other words, if you've got $5,000,
Let's say I got 5,000.
to turn that into 100,000,
Yeah.
it's going to take you a little bit longer,
take
unless
time.
you're just rolling the
not,
dice.
Not how long it's going to take me to make 100.
Right.
How long is it going to take me to learn?
And to be confident about investing.
Be like, I know what I'm doing now. I know when to pull the trigger. I know when to fold them, and I know when to go long on it.
Kenny Rogers. I know
Yeah,
when to hold them, when to fold them. Yep.
Oh, you want to sing now? Don't
Yeah. No, when to hold them.
you? Shout it to
No,
people.
when to fold them.
Yeah.
I think, Grant, within 3 or 4 weeks, you'll start understanding the basic risks. And then probably it's 6 weeks to 3 months, depending
Man,
on.
I can't wait that long, bro. I want to know how to do that.
It takes a little time though, because there are so many elements that go into this
Yeah.
whole thing. We
So-
call
so what- do I
them
do
the
it?
Greeks. The Greeks. You've got deltas and thetas and all these other things.
Oh my
You've got to
God.
really understand.
But you don't need to know what those are. You just need to understand how that works.
How that works.
So are you going to
We can
give me?
show somebody in just a couple weeks how that works.
Yeah. Are you going to give me an example stock and say,
Oh,
okay,
yeah.
you're going to go pretend money?
Yep.
Do you use like Monopoly
Yeah,
money?
called paper trading.
Yeah, paper trade.
Yep, you just literally write the number down on a piece of paper and you say, here's the time that I'd like to buy this stock. I think this stock is about to go up because similar to the squeeze, as they call it, that's going on right now in GameStop and AMC and Koss headphones and all that kind of stuff. Because of that squeeze, what might they squeeze next? Well, all these solar stocks have been trashed. All these lithium stocks have been trashed. That might be the next area they go after, the Roaring Kitties or whoever. Well, so I'm going to set myself up to start making money in those because they were
What's
way
the
up
biggest
here.
paper trade that you missed?
Oh gosh,
That you were
GameStop. For sure, I would say.
Yeah.
I mean, when you look at it, it was what, up 2,000%? I mean, that thing, and I don't mean this time, I mean going back to 2021.
GameStop, okay, just so I understand, GameStop is that company, GME, right?
Yes.
Yep.
They were doing software games
Yes.
years ago.
Yeah.
So what's the big?
And they had a retail outlet
Yeah.
that they'd basically sell you the games. And people
So
could
what's
go
the
in
big
and
attraction?
trade them.
What's the big? What's the big
They just,
attraction for this?
what they do is the Wall Street started to really figure out, hey, there's a lot of shorts going into this stock. All
Shorts
these people,
meaning
shorts
guys are
meaning
trying to-
somebody's selling the stock without owning anything, right? That's a short. So they're shorting the stock. They think this thing is going to zero. And it's getting pretty daggone close in some cases. A lot of these various names that you're talking about have gotten very close to zero. They're under $1 sometimes. Maybe they're under $4 or $5. Once they get under $5, that's when it gets pretty interesting. And you start to get those nerves start to get up.
because
there, but-
because somebody's got some bad news on it, sales or
Oh, the bad news
locations
is out there, and we know it's out there, but then somebody else comes out there and says, you know what?
Maybe not.
There's so many shorts out there. There's too many shorts out there. Was GameStop, wasn't it like 150%? It wasn't 100%. So in other words, they got 1 million shares. It wasn't 1 million shares that was short.
1.5
They were
million.
1.5 million short. There's only 1 million shares. They're over the number. So that creates an incredible squeeze if that stock starts to move to the upside, and that's where the squeeze starts to become
And that's where
reality.
they act
because
like
they're dumping the excess shares.
Well, yep. What they have to do is, so Grant decides, I want to sell this stock. I think it's going to zero. It's at $6. I think it's going to zero. It falls to $4. You think you're a genius. Now, a bunch of these Roaring Kitty guys all come after you and they say, Grant's got $13 billion, because that's what one of these hedge funds has. On the short side, in other words, betting that it's going to zero. They've put money on the short side. They've sold the stock in hopes of buying it back cheaper. Now, all of a sudden, all these guys act as a bunch of ants, just pushing and pushing and pushing. Now the stock's back to 5, then it's to 6. And then Roaring Kitty puts out a tweet and the stock jumps by 100% that next day, goes from 6 to 12. And then it starts moving up to 20 and 30 and 40 and things like that. They're trying to crush that hedge fund. They're trying to force that hedge fund to buy back all of that stock. So is this an investment? No.
Right.
That's a trade. But
This is a trade.
Definitely a trade.
it's just a
You're
trade.
just-
They're
you're
short
just-
probably for
you're
the
just-
right reason. You know what I mean? I mean, you're shorting the stock
But
because
too
it
many
is-
people went short.
right, and over shorted this whole thing.
Yep.
So
And not everybody can make it out to the front door.
Right. It's like you scream fire in a crowded theater. Not everybody gets
So
out.
are you guys, so this is a very important point. You're not investing You're trading.
We're trading and
Action,
investing. Yep.
action, right?
Yep.
You're
In that particular case, the short case, that's a totally different set of circumstances than a standard option trading thing that
which
we
would
would
be
be
what?
doing.
Give me a standard.
Standard
option.
would be, Oracle has earnings coming up in the next 2 or 3 weeks, and so the company's fine. There's very little shorts in this thing. It's not part of that. But somebody says, you know what? This is a good time of the year for Oracle. They're going to probably report something very good. You know what? We're going to buy a couple thousand options here and see if we aren't right about this move to the upside that we think is coming because of a catalyst that we all know about, its earnings or whatever it might be. That's what we normally do. Now, this short squeeze stuff, it happens a lot, but this has been an incredible time.
Got another one for you.
Yeah.
Netflix.
Okay.
We all know Netflix. You know, I saw you and Travolta on stage, or
Yeah,
you
yeah,
and
yeah,
Kevin
yeah.
Hart.
I'm a
or-
movie star.
Well, I know you are.
He is a movie
and I had to send you that when I saw
yeah,
that
yeah.
Cash Out movie.
Dude, were you?
And I saw
so
you and Travolta.
What were you doing? You're watching it and you see the plane fly?
I see your plane, and then I see all the 10X flags
Yeah,
and everything.
yeah,
I'm going, what?
Right?
And then he goes, hey, you like that 650, don't you?
Yeah.
Meaning the G650, folks. That was Cash Out with John Travolta. That was a funny scene. That
was great.
He's a great guy. The guy understands. But anyway, back
Yeah,
to Netflix.
yeah.
All these people that want streaming media. Netflix says to some of them, well, you know what? You're sharing your passwords. Tell you what, you can keep that, but if you want ad-supported, you pay us what you were paying us before. If ad-supported, meaning you have to watch an ad to see that show. On the other hand, you pay us another $10 a month, you don't have to have it ad-supported and all that. Grant, that has gone up to 40 million people are now watching Netflix ad-supported.
Ad-supported. They
Yep.
would rather pay for the ad.
They would rather not pay as much,
not pay.
and they can watch all this content, but they don't have to pay as much, but they have to watch an ad.
That suggests a weak consumer.
Well, and
Right?
I agree.
I mean,
And they've got a deal that they just signed with the NFL. Pete's our big sports guy, so he knows
course
this.
he is.
But on Christmas 2024, this Christmas, they're going to have 2 games on Christmas for the NFL. And those 2 games, Netflix just paid $150 million to put 2 games on. Are they going to be able to charge people more money for that subscription? No, but it's something that they're doing like the Tyson fight to enhance.
right. And the Brady roast. That was a new thing. So this is good for Netflix?
I think it's great for
Huge.
Netflix. So into this weekend, we were buying Netflix into the weekend because
You're buying what? You're buying an option?
call options.
A call,
Yep.
which means?
The right to buy the stock at a certain price.
So a call, if I understand this right, is, hey, I like this stock.
Yep.
I'm going to own it anyway, long term.
Yep.
And the call is a cheap way to not buy the full, what's it
It's
trade
a
at?
$600 stock.
Yeah.
So do you
rather
want to
than paying
spend?
$600 for one share,
Yep.
I can pay.
You could pay a couple $100 and control that $600 stock for a week. Or if you spend a couple thousand, you could control it for a couple months. So the whole thing about options is,
And I sell it when it gets higher.
yeah,
Like what's
If you want to.
What do you mean?
Well, yeah, it goes higher. Doesn't mean you have to sell it, right? I mean, you might want to sell it. If it goes,
Well, just give me that example.
if it goes to $2 to $4, you probably should sell half. That's always been our rule. Because if it doubles, take off half. You know what?
I know, but
all your money's off the table.
But bro, you guys got to explain it. Like, okay, let's just do the Netflix thing.
okay.
Today, Netflix
So
is trading for what?
let's say it's trading at $615.
Okay, $6.15.
And I think it's going to go up to $630 by this Friday.
And you're like, hey, well, that's not a long-term hold.
No, that's not
That's
a
a
long
trade,
term.
though.
But it's a trade.
That's a trade. That's a trade. God damn, dude.
What's the high for Netflix? Well, it's been as high as $690, almost $700.
Yeah.
So if
but
I
now
think
you're
it's
predicting
going,
between now and Friday, dude.
yeah, but that's because options give you that flexibility. I can trade very short term, or I could invest longer term. So for instance, Grant, right now I could buy the 615, the at the money call.
Okay.
Gives me the right to take it from somebody at $615 a share. Let's say I buy that 1 year into the future.
Yeah, good.
So that's definitely an investment, not a trade.
Yeah.
So I buy that. Now, a lot of people.
And what point are we putting on that?
Well, like right now, and we're paying a couple $1,000s for
It's
those
going to cost you
options.
money. It's going to cost you more money, a lot more money, because now you're buying time. You're buying 1 year in time.
Yeah. So let's say I pay $2,000 for a year at a time.
Yep.
That was
And then let's say that a year from now, it doesn't get to 700, but it gets to 680. From 615 to 680 is all your profit. You know, you make that $65 profit
without investing,
without putting up any more money. And you're only risking a small amount, not $615 a share, but maybe just $20 or $30 per option that you purchased. Get this one, Grant, because I was kind of amazing myself with this. Everybody always.
When you start amazing yourself, bro, that's
He's only been around since 1981.
How often does this happen, by the way, that you amaze yourself?
Well,
Are you always
more and more often. So I was looking at Netflix. Market cap is, I think, $280 billion. That's how much the company's worth right now. Disney is worth $165 billion. You remember when Disney was going to buy Netflix, or Apple should have bought Netflix?
That was a huge mistake.
All these guys should have. Netflix was $50 billion, and they said it's too expensive. It goes to 100, it's too expensive. 150, too expensive. They could buy Disney. Netflix could flip it around and buy Disney if they wanted to. So do I want to bet on that leadership and that kind of model that everybody has a Netflix account? You bet I do. And now they're putting sports on there. And now they're putting the WWE or UFC, like the guy that you interviewed on stage, from the UFC. I mean, everybody who's into sports loves Netflix.
And is there anything in terms of return for anybody who wants to do it? I mean, when you look at what live sports, there's nothing that can compare to it. And that's why you all of a sudden have these games on Christmas, right? Well, do you think people are going to probably add
the only way you can watch that game is on Netflix. You can't watch it on TV. You can't watch it on cable.
Anybody that was thinking about canceling their Netflix account,
they're going to hold on.
Canceling now. So that's a good play. And for them to go, if they're a third of $1 trillion company, you know they want to be a $1 trillion company.
Oh, yeah.
And you can't do that a subscriber at a time. You could do it by buying Disney.
Right.
Yep.
Going back for just 1 second, though, when you said to John, hey, 1 week, that's just, what is that? That's a trade. That is what we've become a little bit more and more. We're morphing into that over time is people now, because there are expirations. When John started, was it quarters?
Yep, every quarter.
Used to be quarterly during the year. Then it turned
every 3 months.
Every 3 months. Then it turned to months, right? Every month you'd go out. Then all of a sudden it became something even more and more and more. Now there are dailies, but there's primarily there are week-long expiration cycles. So we're seeing, and I would say right now, probably of the options that we're seeing, if they trade 100,000 in one particular stock, they're going to probably do 50,000 of it in the first week, and then it staggers all the rest of them. People are there in front. They are trading. There's very few investments, but there are investments out there when they come in those big chunky ones that come deep in the money and then.
See what we should do. Okay, and guys, I'm gonna be learning along with you. My team's gonna put a landing page up. If you have interest in what we're doing at Market Rebellion, I am gonna learn with you guys. Okay, so literally we're gonna create an account for Grant.
Cool.
And we're gonna start. They're going to basically maybe every week, hey, Grant, this is Grant's trade this week. Okay? And this is, I'll use my own money and we'll track it and see if there's some winners and losers. But I can't learn this game without doing the game. It's like anything else. You guys played football. Real estate is learned by doing the real estate. Investing is learned by investing in the real estate. So there'll be a landing page right there. Put your first name, last name, your email address. We'll keep you in track of what we're going to do at Market Rebellion. If you're in a Schwab account, a State Street account, Vanguard, Fidelity, you don't like the way you're being treated right now, hey, I am going to show you another way to invest your money, to create an account, to get an education. We're going to do some great things for the middle class. So you guys can start creating wealth and using some of these hacks that the wealthy are watching. You guys have both talked to me in the past about unusual activity. Okay, like these are UFO activity. Okay, I think about where's the money going? Like follow the money. Talk to me about unusual activity and how we can educate our audience at Market Rebellion with unusual activity.
Well, we created an algorithm that we trademarked and everything called the Heat Seeker. And the Heat Seeker basically is looking for large blocks of institutional buying. We call it the smart money. Why would it be smart? Well, because somebody's investing 20 million bucks. Do you want to follow somebody like Grant into a great real estate? Of course you do. Do you want to follow somebody like Buffett, Cuban, Gates, any of these guys into their big trades? Of course you do.
Yeah.
So what we're looking for, and a lot of times it's BlackRock, Blackstone, it's Bridgewater, it's any of these gigantic hedge funds that are buying big chunks of a particular stock. They might.
You see them buying.
Yeah, and we don't know who they are.
You don't know who.
We just know the volume.
There was
is
activity.
Such,
you can't.
Yeah, that it's
something happened.
Yeah, either Grant just got an itch that he had to scratch, and he had to buy $20 million worth of options.
Yeah.
Or it's Bridgewater, or it's Stevie Cohen over at Point 72, or any of these. You know, the guy that Billions is after, and so forth. All of these folks buy a lot of options. Very few of them sell options. Most of them are buying these options to get that leveraged bet to the upside if they're bullish, and they do the same thing to the downside when they're bearish. In other words, they can buy an option that lets them sell a stock at a certain price, but they don't have to sell it, but they can sell it at a certain strike price, and those guys get rewarded huge. I mean, you know, Humana this year, stock dropped by nearly $100 in one day. If you had an option to sell that stock, you could have really made a fortune by owning that put option. So it works both ways,
So
upside or downside.
Yeah, is this something the investors like looking at every day? They're on their phone, they're on a computer. They got multiple screens.
A lot of them are.
They're degenerates.
Yeah. And I'd also.
Are there any degenerates in this?
Oh, there's probably some. But I would say this, just going back for a moment with the unusual side of things. When we see these big trades that come in, it's just like when we stood on the trading floor, right? We would stand in the trading pit, size of this room, and people would come in and say, hey, I want to buy 5,000 of these. And you sell it to them, and all of a sudden we've had the transaction, right? Now, these guys are coming in, and we're seeing this all come in through all these computers all around the country. I mean, we're averaging 47 million contracts per day in the options world right now.
Wow.
That's up 3 million from last year, which is up 7 million from the year before, which is up 4 million from all we've done since going back to 2010, but particularly with the pandemic, it's taken off. And so now people are a lot more interested in this whole thing. And I do think it's important to say, this isn't dirty money. This isn't necessary. I mean, it could be, but a lot of this is just that they have access to things that we have access to. We just don't know how to access it, right? I mean, like, if I wanted to look into Cardone or whatever enterprises, if I've got enough people under my, that are out there looking and doing things, they can kind of figure out, well, it looks like he's kind of positioning more in Texas than Florida right now.
Yeah.
Whatever. And that's the kind of thing that these things.
There's all this data, dude. The data's everywhere.
The data's
You're
everywhere.
looking, like it's obvious. Like we're doing a deal in Fort Lauderdale. I find out the guy's selling this asset and another one 12 miles away. And as soon as these two get done, boom, there's this one that's my neighbor.
Yep.
So like,
so you know it,
not
but that's
in the
not
game.
dirty though. You just know that because that's what you do, right?
Exactly.
Yeah.
I mean, I'm seeing where the boats are going to catch the fish,
Right.
and it sounds to me that's what you guys are doing.
That's what
I
we're doing.
like the way
That's
you
a great
put
way.
that, Grant.
Yeah.
Where the boats are going to catch the
That's
fish.
why we
Let's
signed
say
with
I'm
you.
a fisherman, right? I'm in the boat, and the GPS goes out. Like all my technology goes out. I'm gonna be like, well, why don't you guys just follow the fucking boats over there? They said that guy's. And by the way, they got poles in they're bending, and they're all having fun. And
There's guys with nets.
yeah, and look, it looks like there's something happening, as opposed to over here and there's nobody there.
Yeah, that's right. I mean, there are about 7,000 stocks in the U.S. How do you know which ones to trade?
7,000
Are you going to trade the same seven? Are you going to trade Netflix, Apple, Google, Microsoft, NVIDIA? Are you just going to trade the so-called Magnificent Seven?
Yeah.
Or are you going to look for the ones that the smartest hedge funds in the world, the smartest big investors in the world are trading right now? That's what we're looking for. And like you say, I think that's very well said. I see a bunch of poles bending, from these fishermen reeling in these big fish. That's where I want to go fish.
Yeah.
I don't want to go over here where the water's calm and there's no fish.
Yeah.
I want to go where the fish are.
Yeah.
That's
By the way,
smart money.
When it comes to that, and we were talking about Roaring Kitty, and he does what he does. It's fine. Whatever.
Roaring Kitty is a person.
He's a person that has been a voice for the folks that are,
You know who Roaring Kitty is?
These guys, I guarantee all these guys know.
Fucking degenerate right here.
But what I was going to say is this. So it's interesting because somebody else, David Portnoy, who's a fun guy, and he's been a part of this whole thing, and he's really done well in the markets. But, you know, he was saying the other day, he goes, I didn't get the call. And he was all mad, right? He was kidding. He was joking around. But he's like, I didn't get the call. I didn't know GameStop was going to do this. Why didn't I get it? I'm not in the inner circle. And that made me think, well, let's take a real quick look back. And we looked back, and just a week and a half ago, before this whole big move, they were buying calls. They bought 5,000 more calls. They bought 5,000 more calls.
You can see it.
They're buying them at $11 and $12 strikes, not to get confusing, but basically stock went to 78 in the after hours. The highest print while it was in the regular hours, $65. Went from $11 to $65.
Yeah. So when it went to 11, so you're saying guys were buying calls?
Guys were buying calls.
At $6.
Very inexpensive calls at the time. There was stock was
somebody
trading
knew
around.
something.
Yeah.
You went back.
Somebody
and looked.
sniffed out something. Yeah.
It was probably
So
roaring kitty.
the insider trading thing happens every day.
Yeah,
but it's not always. Yeah.
It's not illegal insider trading.
Right.
No.
It's educated, intelligent, follow the money.
And if you're roaring kitty, so you know, because you're Grant Cardone, that 5 million people are paying attention to whatever you're saying on social, because that's your social following, just on one platform, right?
Yeah.
Well, so all of a sudden you say, hey, instead of with real estate, where it's much harder for the average person to get in there and race ahead of you on a $150 or $200 million
It's
building.
impossible, dude. There's no liquidity in real estate.
Right.
It's slow. It's boring money. I buy a deal. Like
You hold it for 6 years.
And my audience wants some action.
Yeah.
Like I know there's people in my audience. I've had guys tell me, man, I like your little 6% return. I get a double every 7 years. But bro, it's boring. And it is. My money's boring, dude. It's a boring. It's
a good boring.
Very heavy. You know, like you can't go build another one tomorrow next door. This thing, man, a guy could pick up $500 a day.
Yep.
Once he becomes educated.
Absolutely.
Go ahead. I didn't mean to interrupt you,
No,
but it is a much more active game.
And who is the likely buyer of those calls Pete was just talking about? GME is the symbol for GameStop. So who were the people buying when the stock was $11? Because it's been between $10 and $11 for over a month. And who were the people buying there? One of them could have been Raging Kitty or Roaring Kitty.
But it probably wasn't.
But could have been him or one of his friends that decided, you know, I think you're right. I think I'm going to buy a bunch of these calls. Gives me the right to buy it at $11. When that thing goes to 20, that guy's off like a prom dress. I mean, he is taking profits right now. Because he's saying, you know, this is a fabulous trade.
I'm confident that hadn't happened for him in a long time.
His last prom was a little while ago.
It's been a little while.
So when this thing goes from 11 to 65 or 20, right, on the way up, he's selling.
That guy is probably the one selling to all of these other people that are just flooding in at that moment.
Because his $11 is worth what now to him?
So
is he getting some?
He just doubled his money. So if he had $1 million on that trade, he turned it into $2 million the very next day.
Does he regret not waiting for it to run to 65?
I'm sure he does.
Probably.
I'm sure he does.
But that's okay. He still did well, right?
Yeah.
And then now he's going to go hunt another
something.
And now he's looking for what else is short.
Now, what is the influence of this going forward? As you guys are telling me this, I'm thinking about the 10,000 baby boomers, and some of you guys might be baby boomers or getting close there right now, retiring from the workforce. And our life gets extended. Now I'm living till I'm 93 or 103 or whatever they're threatening.
Threatening.
And I could still trade though.
Oh yeah.
Okay, I might not be able to play golf or ski or nobody wants to hire me, but I could trade.
Yep.
Click on that mouse, right?
Yep. It's. I mean.
So maybe we create a like a super intelligent tens of
network
millions of baby boomers that can trade options in the future.
Oh yeah, and if you looked at it, I would
Create
say
a new wealth class.
Yeah.
a certain amount of the folks that are 50 to 80 are going to trade longer term, most of them. But some of them are going to want to get that quick rush that you get because I'm telling you, the endorphins pop just like you just had a great workout.
I bet, bro.
Yeah, I mean,
we'll call
it's
them
like
the geriatric traders.
Yeah, it's like
Market
applause.
rebellion with the geriatrics.
Well, but now
you
I don't
can't
know
get a
about
hard
the
on
ring.
anymore, but you can get a good trade done.
Well, but think about this. All those people that are, big fans and that are learning about real estate and really how to manage their business better and all the rest from you guys, all those folks that are 25 to 35, they're going to be more in the shorter term trading.
Yeah.
Some of them will invest, but I bet only 20% of it will be investment. 80% of it will be trading, I bet.
Yeah.
And
I
then
had
the
a guy on
older
the phone
you get-
yesterday. He's like, I'm going to put $250,000 in your deal.
Mm-hmm.
He's like, but I got to keep some cash. He has got $1 million in cash. I said, dude, give me the whole million. Just put the whole million in, right? He's like, nope, I have to save some money for trading.
I
Told
like
me this
that
yesterday. I said, like what, dude? What are you going to trade? He's like, I'm going to put $5,000 in Apple. I said, bro, it's at what, 380 or something?
It's 180.
100. I said, it's got to double. It's got to go from 190 to 380. This is a great example.
Yep.
It's got to go from $190 a share to 380 for you to get a double. Mm-hmm. And he's like, yeah. He's like, man, I just like the action. I want the action. He would be better to buy a call.
Yep.
Oh,
right?
yeah.
Am I getting this right?
Yes.
You are.
Yep.
And
And he would pay, because $5,000 would get him like, what, 200?
no shares at all.
No shares at all. Yeah.
Exactly.
Yeah.
But a call, he could get how many shares?
He could control
5,000
1,000 shares of Apple for
See?
that same $5,000.
And he's a long-term holder anyway.
Yep.
Right? Is that right?
Yeah, he probably
depending
is.
on depending if
Pete's the longest term holder, other than probably Steve Jobs' family.
This is a bad.
He is one of the longest term.
You've
No,
held
I've
it
held it from what
forever.
price?
I think originally it was like $3 or $4 when I bought it, and that was pre every split that's happened since or something like that.
And now it's split 3 or 4 times at least.
Not because I'm smart. It's all on my wife. I give her all the credit in the world. She goes, look, you ought to buy this Apple company. It's going to be big. And I'm like, all right, I'm in. He's a Berkeley guy. We had ties to Cal.
Yeah. So you've owned
Steve
that.
Jobs.
You've owned that how long?
Since 1993, I think, or something like that.
Wow.
And I remember
So you don't do the calls and options on Apple?
Oh, I sell calls against it all the time.
yeah,
And collect.
because now he does what you do.
Yeah.
See, you can do that for those people, again, 50 to 80,
You've
let's
got this
say.
very liquid position now in this stock that
Well-
you've owned, that you have a bunch of money made in.
Yeah, but let's say that just for the sake of argument, that he has $1 million in Apple. I think it's multiples of that, but let's say he had $1 million.
How many multiples is it?
It's a lot. But
I drive a pickup truck, man. I don't
just
care
like
about it.
Warren Buffett. So let's say you have $1 million of any stock, Apple, let's say, or Disney or whatever.
Yeah.
I can collect rent just like Grant collects
Yeah, that's
rent.
right.
Because when he collects rent, he buys a big real estate place and he says, hey, John, it's 92% occupied, or even 100, some of your deals
95,
and things.
95.
95% occupied. Okay, so he's collecting rent every single month. With Apple, Pete can collect rent every single week.
Because of the call.
Yep, he's going to sell an upside call against his holding, his core holding of Apple, and he just gets revenue in every week. He can either just reinvest
Is that earned
that.
income?
You create a dividend stream by doing what you're doing here.
Yeah.
So they already have a dividend as well.
Right.
But if you own 1,000 shares, you sell 10 of these for $1, you take in $1,000. And if you can do that,
Is that considered earned income?
How do they
what kind of
tax
income
that?
is
Short-term capital gains.
Okay.
Yep,
okay.
that's why I
I'm
live
willing
in
to
Puerto
do it.
Rico.
Yeah. Okay, so when are we going to be launching this, guys? When can the audience do something with this? When can the people that follow me? 78% of our clients are investing in the stock market right now, actually involved in probably your own management of the money. Unfortunately, investing in the stock market is not my area of expertise. It never has been. I guess if I would have started learning the way you guys did, I'd know what you know now.
you'll know that pretty soon.
Good. So we're going to create an account for me. You guys are going to be able to follow along. These guys have 40 years of Wall Street, and not just Wall Street experience, but going on TV every day saying, this is our trade.
Yep.
Make it public. I think you're more successful than Jim Cramer. Fucking guys,
Jimmy's
never right.
Jimmy's
The
a
guy's never
friend,
right,
so I'm
right?
not going to bash him, but I think
Well,
we're
everybody
pretty good.
needs I mean, the guy's, is he guy ever right, bro?
Hey, Jimmy is a good guy.
I didn't
honestly.
say he's, there's a lot of, I got some good kids, but it doesn't mean they're right. Like, is
Well-
Jimmy ever right?
Oh yeah. But
When's the last time he's been right, bro?
Oh, come on. He named his dog Nvidia,
Okay.
so he had to be at least right about that, right?
Okay. Or he doesn't have a good imagination. What should we name the dog? He's like, well, I covered NVIDIA today. So, These guys are considered some of the most trusted and well-respected investors on Wall Street today, and we are announcing a partnership, Market Rebellion, Pete, Jon, Grant Cardone, my clients and community will have the benefit of their priceless expertise, watching them help me learn the game. So if you're interested in learning how to invest, manage your risk, grow your portfolio, you want liquidity by using the stock market, you want to learn about calls and options and derivatives. I'll get this. What risk really is, what's risk to you? It's probably a different definition for everybody. Is that right?
Yep.
How to take advantage of the squeeze.
Yeah,
I want to squeeze somebody, dude.
Yeah, that's right. And I tell you what, we spoke of it earlier. There is no better feeling with all your clothes on than you can make money in the stock market.
Yeah.
Because you're beating some of the smartest people out there.
Yeah.
And all you've got to do is be disciplined. Just understand the game, be disciplined. It's like applause.
Yeah.
It's like when he was in front of 100,000 people playing for, the Vikings or Tampa Bay or whatever. That's how it feels when you have those winning trades on, just every day.
But remember, they're not all going to be winners.
There's going to be a winner.
Right.
There's going to be a winner every time. There's going to be a loser there.
Yep, absolutely.
So I could actually trade against I could make a trade on a Bill Ackman.
Yep, sure.
Or a Mark Cuban.
Absolutely.
You bet.
Knowing do I know it's him? Well, I could because he's public, right? He's pretty public.
And a lot of these guys have almost a blueprint of who it is making the trade because they like certain numbers and all that. It sounds crazy, but it really is true. You see it all the time.
Yeah, you see their genetic DNA little
That's right. All over it.
Yeah. So look, the largest investors in the world actively trading the markets every single day, generating cash flow in addition to their hold. This is what you were talking about with Apple stock, to mitigate the risk of their investments. And now through our partnership with Market Rebellion, I'm so excited about this. The 10X community, you guys can now get access to the same trading strategies used by some of the largest players in the world, like the Buffetts and the Ken Griffins, Steve Cohen, David Tepper, Mark Cuban, Warren Buffett. Did I say Warren? Of course. I got to say Warren twice.
Sure.
So.
That's all right. He's worth it.
Munger's probably trading from heaven right now.
He might be.
He might got an inside. And so this is going to be a great thing that we're going to do here. I hope you guys get involved with this. My team's going to set up a landing page. So you're going to be able to have access to these guys on a daily. You're doing a show here. You're going to do a show here today.
Yeah, we are.
How often
the
do you
Rebel's
do that?
Edge. We do it Monday through Thursday.
Yeah.
At 1 p.m. Eastern time. So 1 p.m. we talk about macro for 1 minute. We
Macro
don't waste your
meaning?
time. Broad market.
The big broad side of the market.
The economy's terrible, or
what is the trigger
people,
to it, right?
Like the macro. A macro thing is, I think this would be macro. Hey, people are starting to sign up for Netflix's ad platform. Suggests to me that the consumer's weak.
Yep.
That's what it suggests to me. Or is that micro or macro?
That would be, you're taking it from macro all the way down to micro.
Yeah.
But that's cool.
Yeah.
And that's what is a trigger for people to say, hey, maybe I want to pay attention to consumers that are not willing to pay the extra $10 a month for the free or for the no ad Netflix. I want to not pay as much, but I'm willing to suffer through some ads.
Great example today would be this. It's a little bit of it's micro, but it's also macro. Walmart had earnings today. Why is that macro? Because why are they doing so much better now ever since the pandemic? Because so many people have become parts of Walmart, spending money at Walmart, actually going back there, and we're talking about people who actually have higher and higher and higher, their income levels are that much higher. Why are they going to Walmart? Because they went there, they found it to be a pretty good experience. It's not as bad as whatever they maybe projected in their head, and their numbers are absolutely outstanding.
They are, huh?
Yep. And their online numbers just blew up.
So it's a
trade
Starbucks
down.
numbers are bad right now.
Terrible.
McDonald's was terrible.
Yeah.
So how do you make sense of the Walmart? It's the same consumer.
Who's making? Yeah, but as a consumer, you go to any of those Starbucks or whoever, they're $5 for a coffee, right?
Yeah.
You go walking around in there, and you've got your dollar amounts have come down. You're not seeing as bad in terms of the inflation, right? We all see the inflation; it's everywhere. But at least at Walmart, people have a little bit better shot at being able to use a little bit more of the money that they've got to get more in the cart.
And I wonder, how's Costco doing? It makes me think of Costco.
They do generally pretty daggone good.
See, I think Costco wins.
It's the subscription model that helps.
Yep.
Right?
the reoccurring
Because-
revenue model, Sam's Clubs,
I was gonna say, they
Walmart
got Sam's.
also work out pretty well.
Because they can't buy a home. I can't buy a new home. I'm stuck in this 3.5% interest rate home.
Mm-hmm.
I can't. I thought I was going to be buying a new one by now. I can't, so I got to fix it up.
Yep.
So how does that bigger view influence your what
our
we're gonna-
investments?
Yeah.
So like, for instance.
Or yeah, but that's an investment. It's not a trade.
Yeah, but that's okay. I mean, like, for instance, I'll give you two trades right
Yeah.
now. One, if interest rates don't go down for a while, if they
Yeah.
stay high like they are right now, relatively
For
high.
how long you talking?
Let's say they stay like this for at least a year before
Okay.
the Fed cuts.
Okay.
Because they're not going to want to cut into the election because they're almost like they're skewing the election towards the incumbent, towards Biden. So they
Big Dick Donald.
yeah, that's right. So I would say J.P. Morgan's one of the best plays if
Really?
you think that we're going to stay flat on interest rates rather
because-
than dropping down. Because they make money on wealth management, they make money on deposited funds, because they're not going to give you all of that 5% that the 30-year money's trading at right now.
right.
They're going to give you 2%. And so they make the spread between what they pay depositors and what they charge.
You like J.P. Morgan?
I do.
Do you like J.P. Morgan right now?
I do, for a slightly different reason,
Yeah.
off the topic what you were saying, but investment banking.
You guys are going to have access to this. Can you imagine having access to this data? So you like it?
I like them because of investment banking. And when you look back and you say 2023, you know what we didn't have in 2023? We didn't have IPOs. They stopped. They almost like completely dried up. This year they're on fire.
They are.
And that's feeding into it, the margins they get from that.
Yeah.
Why is Goldman Sachs at all-time highs? Not 52-week highs, all-time highs. Why is JP Morgan all-time highs? Why is Citi running from $38 up to $65? Because of the fact that all these guys are involved in investment banking, they're getting that margin that they get, and it helps from the standpoint of they've got all these IPOs.
Right.
And all these IPOs
not
are
from
huge
checkings
money.
and savings, but from the IPO.
Yeah.
And from mergers. Like,
Yeah,
you want to
now,
buy something,
M&A, yeah.
you want to buy another
Got it.
company and put it under Cardone
Yeah,
Industries.
got it. I like that idea. I like the way you're thinking.
He likes that idea.
But the community banks and the regional banks are all freaking slaughtered still
Yeah.
right now. They're
still dangerous.
all-time lows, right?
They're still very, very dangerous. Yeah. I mean,
They took one out
We had
in
a
Philly a
collapse
week
like
ago.
a week ago, and nobody even talked about it because it's not
public.
interesting anymore.
Yeah.
Right. Yeah.
That's crazy, dude.
Yeah, well,
What other trades you like?
so to the down, if you think rates are going to start going down,
Yeah.
you spoke about it already.
Yeah.
There's a stock called Builders Supply, BLDR.
yeah,
Okay, so
orange company.
yeah, you could go to
They got an orange logo.
Oh
got the
yeah.
orange logo.
You go to Home Depot, and that's something for your garden,
Yeah.
something for your home, something hardware and all that kind of stuff. But if you go to Builder, that's all they do is stuff for building and construction. So will building and construction pick up if interest rates drop? Yes.
Yeah, you like
Absolutely.
that? You like that? Or
I like that, and I'd also add to that by saying there's so many derivatives of something like that that
Yeah.
come off to me
Right,
into my head.
right.
Copper. Because copper is everywhere, right? That is
Yeah.
a huge thing that people need, and if they're going to be doing some of this stuff, well, keep an eye on the price of copper, and then all of a sudden you go over and look at some of the biggest names in copper and say, you know what? Maybe this thing does have a chance to go a little higher. Freeport-McMoran. Maybe this thing skies up, which it's been doing.
yeah.
There's always something after
Yeah.
something after
What else? What tech stocks you like right now?
I still like a lot of the stocks that support the AI infrastructure. So in other
I
words,
can't even get Siri to understand me.
well, so there's an example. Apple is getting
I
heavier
literally asked
into
it, call my
AI.
wife, and it called another woman.
That's probably not good.
No, dude. I'm like, what the hell's going on here, man? Can't you guys understand this? My Cajun or whatever it is. Like,
Well, Apple's getting heavier into it, right?
Okay.
They knew they were behind the curve, but they've got however many $100 billion. They're not going to invest all that, but they're going to invest in making Siri better, making what they do better as far as maps and all the rest for you. So I'd say Apple is going to invest there. Micron, because it's memory. Super microcomputer, or that one, SMCI, because they make the racks that all the AI servers are going to be sitting in and all that. There's a lot of ways to play AI other than just NVIDIA.
yeah. Same?
Yeah, I like a lot of those names. I'd also even throw in there a name that nobody else likes for the most part, but Meta, right? I mean, everybody's so against Facebook. They really hate this guy Zuckerberg and everything else, and they have their reasons that it might be right or not. But I always look at it. I've owned that one, Grant, since the IPO itself.
Wow, $19.
Yeah, well, I think it was wasn't it 38? I think. Well, 38 I think was the number, and they had to hold it up for a while. Then it crashed down, and then now it's done pretty well.
Yeah.
But everybody still hates
today.
They still hate the guy, and so they had their most recent earnings. The stock dropped significantly to the downside, and now it's just been going a little bit higher and a little bit higher. They trade very inexpensively. We always talk about price to earnings as a measurement of expense. They trade very inexpensively right now. They still are, and they've got ungodly cash. The cash flow there is off the charts. I love that name.
Right now, Grant, I'd say one of the places to be with data, like Pete was talking about, whether it's Meta, which is the former Facebook, or whether it's Google, all this data gets developed every day. Every single time you answer your phone, every time you walk by a department store with your phone, it knows where you are. It's sending that data somewhere, and chances are that data is being analyzed. Well, you got to have data centers for that.
Yeah, you're talking about
huge
big
data
industrial.
Center. Yeah,
huge, taking up acres and acres.
Exactly.
An empty warehouse could be a real estate play.
Could be a real estate play. Well, so from the real estate side of things, this is a guy that knows real estate better than anybody that we know, and probably one of the best in the world at analyzing this is how much cash flow I'm going to get out of this property, John. I can buy it for this. I'm not going to leverage it up. I'm going to get in here and own this thing. Well, so why not Vertiv? VRT. VRT is a company that, what do? You've obviously, just like you with the REITs, this is a company that just owns data centers.
Wow.
So it's not for
they own the
people
real estate
to live
underneath
in.
it, or they just own the data center itself?
The building. They care about the building and building out that data center for AI, which does what then? It analyzes the data. That AI is out there looking at the data, and they need tons and tons of all those servers in there.
This year.
Not bad.
It's not bad,
Pretty
right?
decent year.
It's not bad, right?
I'd have to be in a real estate deal for like a century.
500% in a year. I mean, you look at NVIDIA, by the way, beginning of the year, I think it was below 400, Pete. Went to almost 1,000, like that.
Amazing.
So they call this the NVIDIA derivative, meaning what? It's an offshoot of this industry. It's servicing the NVIDIA's, the AI plays.
Absolutely. Just like ARM Holdings, ARM is, along with Micron, those are like the memory for those centers and so forth. Anytime you're going to try to analyze all this data and do it relatively quickly. That's why the speed of those chips is so important. They've got to cool these big buildings down, because data centers get hot. A lot of them are using liquid cooling.
Have you been in one of these buildings before?
Yes, sir.
What's in them?
Servers, just racks of servers.
No toilets.
No toilets.
No humans.
No humans.
No. Right? And they're probably guarded.
Cool, dude.
Very, very.
So I know the strip in Phoenix, Arizona, going to the airport. That terrible, ugly drive over to the Phoenix airport, not Scottsdale airport, was just this empty land for years. And now I think they put up, I don't know, some 10 million square feet of
servers.
Nothing but servers.
Crazy.
And probably solar running those. I bet the roof of that place looks all black from solar and all that. Solar, it's not where it needs to be yet because, of course, it's only useful during the day. They can charge batteries with it, or they can pump water uphill with it that they can use at night to turn turbines and things like that. But that's one of the problems with a lot of the green energy right now is they don't have battery storage that's big enough. So that's going to be a play going forward. Who makes the best batteries? Right now, Tesla makes some of the best batteries, but you need even bigger batteries. We talked to a couple firms that we're involved with that are small firms right now, but they're going to be big, like this BioLargo. They have a battery component that's like, I think it's going to be a killer app because you need big storage for the energy that you create during the day, whether it's wind, whether it's waves, whether it's solar, whether it's geothermal. You got to store that energy somewhere. use it or lose it, because otherwise it just,
And that's why you need memory. And John mentioned Micron, but I even threw out there Western Digital, which never gets talked about by anybody. It's lost leader, but they are killing it. And so is Seagate, to some degree, is also killing it. So there's all these names that
I grew up with, man.
Right.
I know all
I was
these
going to say,
names. And they're going to come back and become new companies.
Yep. And Micron was left for dead. Micron was left for dead. That was a stock that I was a specialist
MU, right?
in. Yeah, MU, out of Idaho. They went all the way up to maybe 100 and something, fell all the way back down into damn near single digits, and then made this big run over the last period of time, last year or two, where it's just scored to the upside as well.
So look, guys, there's a lot to learn. It's a big, big industry. Like there's, trillions of dollars are being made every day in the stock market. Every day. Not every year, every month, every week, every single day. Trillions of dollars are being traded worldwide. And I'm just so excited that Pete, John, and myself are doing this together. I'm going to be the student learning. These guys are going to be the professors, the teachers. They've proven themselves highly experienced on TV every day for years. So I'm super excited to bring this to the 10X community. If you're a trader, wanting to be a trader, want to learn about derivatives, puts, options, calls, squeezes.
He's got it all down already.
No, I will, dude. You know why? Because when I commit to something, I'm going to learn how to play the game.
Yep.
I'm going to learn how to play the game, and I'm going to learn the language, and I'm going to quit just trashing something because I don't understand it, which is what I've done for years. I don't understand it, so I'm not going to play the game. So I'm really, grateful that you guys are willing to do this with me and help our community. I'm just super, super excited.
We're looking forward to it, folks. Make sure you check out the links. And Grant, can't thank you enough, man.
Yeah, and we got a few more minutes just for other stuff. Are there any similarities between what's happening with stocks here and, let's say, real estate? Like, what are the similarities that I can lean on?
Well, so when interest rates are going up, it really affects the NASDAQ stocks a lot. Why? Because they borrow a lot. Look at how many hundreds of billions of dollars Apple has borrowed at very low interest rates. Now all of a sudden rates go up, they can't borrow that. They've got to eat down through their cash hoard rather than...
Why did they just buy $110 billion worth of their own stock back?
Because that's what they do.
But why not go buy some of these other companies? They can't find something better to invest in than...
But that's a great question, and I think the answer is no. They actually think that their stock is undervalued because of the lack of movement that it's had this year, 2024. Think about that. When you look at where did it start the year, where is it right now, and then all of a sudden you look at NVIDIA, where was that? Where was, SMCI, any of these various names? Apple has lagged, and it got up to close to 200, and then it eased all the way back into the 170s again, and now back into the mid 180s. But nonetheless, they feel like that stock has plenty of room still to the upside. So I think they view that as the better investment.
What are the similarities? So I have a base point to look from. What are the similarities between real estate and investing? Or in your case, trading?
All right. Well, one of them would be that you can own real estate on the stock side of the world. In other words, without ever buying a piece of dirt, a building, or anything else, you can own a REIT, for instance.
Right.
Yours are privately held. There are publicly traded REITs, which means anybody watching this could buy that particular REIT. They could, and then sell calls against it. So they could, for instance, have a REIT that's paying a yield of 4.5%. With the strategy Pete just described about Apple, they could sell call options against that REIT and turn that into 15, 17%.
Yeah,
you're going to love this.
I'm looking at Starwood right now. Starwood traded down to, because I know they got issues going on. So 2020, this is after COVID, it went down to $10. It's at $20 today. And I just know they have a whole portfolio like.
The other thing that I would say...
I didn't mean to interrupt you.
No, not at all. But just to add on to what John was just talking about is, think of this, because you talked about it earlier, liquidity. You in the real estate market, you don't always have liquidity. Sometimes it's great, sometimes it's not, right?
Yeah.
In the options in the stock market, we have liquidity.
Yeah.
It's going to be able to trade, so that gives you one leg up.
Right.
And then you buy the stock, the REIT, and you're getting also that huge dividend yields that they normally have, but you're creating even more by enhancing and selling calls options against it. Now all of a sudden, something that was giving you maybe a 6% yield, maybe you've turned it into a 10 or 12% yield just by selling an out-of-the-money call that you buy back. Sell it for $1, buy it back for 20 cents, sell the next month out for $1, buy it back for whatever. Whatever strategy
Does it get boring just making money like
man,
this?
No, that never gets
That's
boring.
fun money, man. That's like taking candy from a baby.
Yeah.
Yeah.
And the fact that
The glee I see in your eye when I asked him.
And I love
Is
babies,
this
by the way.
boring?
I got a grandson who just turned $1, so yeah, he's good.
when you have the opportunity to trade stocks, and as you mentioned, trillions of dollars back and forth every day in the stock market, hundreds of billions of dollars back and forth every day in the options market, when you can access that kind of liquidity, Grant, for your folks that love real estate already, and then they say, you know what, I really love real estate, I understand it because Grant and his team have done a great job selling me on this and educating me on it. You can do the same thing in options, taking advantage of Starwood, taking advantage of any of these big REITs, and again, trading what you know, and then enhancing it with that yield, like Pete said, turn that 5.5%, 6% yield into 12 or 14. Now you're doubling your money twice as fast just by doing that.
Well, you guys have me really thinking right now, because even back to the conversation earlier about Warren taking the position in Chubb, I knew this last year because we watched our insurance premiums go from $4 million to $14 million a year, and I'm like, okay. Somebody's making money on this.
Somebody's making money.
And I knew it, dude. It was there. It was right there. And I think just for the audience, like you guys are every day you're seeing something move. And you might not be paying attention to it because you haven't made a commitment to your education. So I'm looking super forward to educating you guys, learning in the process, being one of you. And we'll create an account, guys. I love this idea. We'll create an account. You guys can start showing me what to do, when to do it, how to do it, and we'll track what worked and what didn't work. I look forward to this.
We look
Great
forward to it
partnership
too.
with you guys. Thanks, guys.
Thank you, brother.
Thanks for coming.
Thanks, man. Yep.